Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Thursday, the 4th of April. Starting off with the FTSE 100, and we're still within this rising wedge, which can be drawn from as long ago as April. Support line of the rising formation, basically running through the 6600 level. Given that it is actually a bearish setup, one would be waiting for at least an end of day close back above the 20-day moving average. That's around 66.61 at the moment, the grey line there, before deciding to go on the long side. Otherwise, bottom fishing towards 6600 is a logical thing to do for a quick turn. At this stage, really only back above 6800 would cancel out the danger of a break of this wedge and a move back down towards the 64 to 64.20 zone, which is also where the 50-day moving average is at the moment. So we need to get through both the Bank of England interest rate decision and the non-farm payrolls over the next 24, 48 hours, really to get this market back on track in terms of the rally since the end of June. Onto the DAX, and slight recovery here with the price action basically turning around just above the 200-day moving average at 10,079. That's the black line there. So we're rather in a no man's land. Either want to see an end of day close above the 10-day moving average at 10,232, or a break back below the 200-day line at 10,079. At this stage, still just about favouring the upside, even though we obviously did top out at the top of the resistance, post-April resistance, just above 10,400. Onto the US markets, and here slight recovery here for the Dow, but didn't get back above the bottom of that early July gap at 10,390. Really want to see an end of day close back above the 10-day moving average at 18,448 before assuming there'll be a new leg to the upside. If we do get that, perhaps in the wake of the non-farm payrolls, the target here up now towards the 19,000 zone. The other point we can see is that there is still a possibility of heading back down towards former 18,000 resistance before a new leg to the upside, given that's where the 50-day moving average currently resides. Our side just above 50, which gives the benefit of the Dow still to the long argument. Onto the S&P, and here we bounced off the 20-day moving average, 2-day bounce off the 20-day moving average, 2158. Above that, still looking towards a new leg to the upside and 2200 plus. Probably the trajectory for this market somewhere along these lines, with a rising trend channel there from the middle of June. Target then towards 2250 is a best case scenario, while we're above 2150. Below 2150 risks back down to the 2120-30 area, which was resistance ahead of July's breakout. Onto the Nasdaq, which hasn't really blinked on the latest early July dip that we've had for the most equity markets. A rising trend channel from the end of June. Support here at the 10-day moving average of 47.01, and above that, as high as 4,900 over the next 4 to 6 weeks is the assumed target. For cable, moving along to the currencies, we can see that it's been a bit of a consolidation within this triangle formation, converging triangle. Support, notional support here at the 10-day moving average, 132.15. The resistance, a late June line running at 134.50. Likely range between those two parameters in the run-up to the interest rate announcement later today. Favoured situation probably for a break to the downside, but the easiest thing is just to wait for either 134.50 to break, or the 10-day line above 134.50 points to 137.13, which is the 50-day moving average. Onto the euro, looking for we were looking for rather a break towards 114. Unfortunately, it looks as though it's been in a bit of a bull trap through 112, which was the initial July resistance. Interestingly enough, you can now draw a right line of resistance from the beginning of May, which fits the price action and also the lower trend line there, making up a descending channel from that month. So 112.20 really needs to be broken at this stage to give the bulls some hope. Otherwise, it's probably a drift back towards the 200-day moving average in the 111 area. On to dollar yen, which was or has been the most dynamic of the crosses over recent sessions. Still on the very much on the bearish tack here. We've got these long candles and then very short candles on the retracement attempts. So a couple so far this week, but so still gives us the idea that we're in a falling trend channel here, heading towards the 98 yen zone. And that target's really valid while there's no break back above the initial August resistance around 102.80. So still looking rather negative on the Japanese currency. Finishing up with gold, which has been a bit disappointing. Trying to probe through towards 1370 early to start the month or start this week as well, but 1367 the best we've managed to achieve so far, heading back towards this support line of 1340 and the floor of this rising trend channel from May. At least while we're above that, looking for a 1400 plus target over the next month or so, but looks like we've got to get the non-farms out of the way before the big upside here is possible on gold. That's it from me. More updates at the same time tomorrow.